Stop what you're doing. Put down your phone, close your banking apps, and listen to me very carefully. If you have used Venmo, PayPal, Cash App, or any digital payment platform in the last 30 days to send or receive money, you are already in the system. You have likely walked right into a trap that has been carefully laid out for you over the last 3 years. You might think I am being dramatic. You might think this is just standard accounting advice. It is not. This is a forensic warning about your financial survival, because the letter you are dreading, the one with the IRS logo in the top left corner, is not an accident. It is the result of a calculated shift in federal surveillance that fundamentally changes the relationship between you, your money, and the state. We need to talk about the $600 rule, specifically the weaponization of Form 1099-K. For over a decade, the threshold for reporting online transactions was $20,000 and 200 separate transactions. That was the line. If you were running a legitimate business, you crossed it, you paid your taxes, and life went on. But hidden deep inside the American Rescue Plan Act of 2021 was a provision that slashed that threshold by over 97%. The new trigger is just $600, not $600 in profit, $600 in gross volume. That is 1 month of rent in a shared apartment. That is a used sofa sold on Facebook Marketplace. That is splitting a dinner bill with friends a few times a month. The IRS and the Treasury Department told you this was about fairness. They told you this was about closing the tax gap. They claimed that billionaires were using Venmo to hide their wealth. Do not insult your own intelligence by believing that lie. Billionaires do not use Cash App to transfer assets. They use offshore trusts and complex corporate shells. This rule was never designed for them. It was designed for you. It was designed for the single mother selling baby clothes on eBay to buy diapers. It was designed for the struggling student freelancing graphic design work to pay tuition. It was designed to cast a digital dragnet so wide and so tight that not a single penny of informal economic activity could escape federal vision. Here is the nightmare scenario that is playing out right now for millions of Americans. You sell a used bicycle for $700 that you bought 5 years ago for $1,000. You took a loss, you owe zero taxes. But because the transaction went through PayPal, the IRS computer receives a 1099-K linked to your Social Security number. Their automated system sees $700 of income. You do not report it because it is not income. 6 months later, the automated audit flag trips. You receive a notice demanding tax on that $700 plus penalties and interest. Now, the burden of proof shifts entirely to you. You're guilty until proven innocent. You have to dig up a receipt from 5 years ago to prove you bought that bike. If you cannot find that piece of paper, you owe them money. This is the weaponization of bureaucracy. They know you won't fight it. They know you cannot afford a tax attorney for a few $100s, so you will pay. And that is exactly how the trap works. But if you think this is just about squeezing a few extra tax dollars out of the working class, you are missing the much bigger, much darker picture. This surveillance grid wasn't built for taxes. It was built for something else entirely. Let us strip away the government talking points and look at the forensic reality of why this rule exists. Why, in the middle of a delicate economic recovery, would the Treasury Department declare war on the gig economy? Why would they risk political suicide by targeting garage sales and side hustles? The answer has nothing to do with tax compliance and everything to do with liquidity. The United States banking system is fundamentally broken. We are sitting on top of a debt crisis that makes 2008 look like a minor accounting error. The banks are insolvent. They have lent out money they do not have, leveraging deposits into risky derivatives that are now turning toxic. To understand the $600 rule, you have to understand what money actually is to the government. It is data. And right now, the Federal Reserve and the Treasury are blind. They know exactly what is happening in the corporate bond market. They know what is happening on Wall Street. But they have lost visibility on the street level. The cash economy, the peer-to-peer economy, the under-the-table economy, this is a black hole to them. And in a time of systemic fragility, a black hole is a threat. When you sell a lawnmower for cash, or when you trade services with a neighbor without involving a bank, you are conducting commerce outside the surveillance grid. You are proving that the economy can function without their permission and without their oversight. The government is terrified of a bank run. Not the old-fashioned kind where people line up around the block, though that is coming too, but a digital bank run. A silent exit. They are watching capital flee the traditional banking system into decentralized alternatives. They see money moving into crypto, into gold, into silver, into private transactions. The $600 rule is their attempt to close the exits. By forcing every digital payment platform to report to the IRS, they are effectively deputizing Venmo and PayPal as agents of the state. They are turning these private companies into surveillance outposts. They need to see every single dollar moving through the system because they need to know how much liquidity is actually left. Think about the timing. This rule was pushed aggressively just as the Federal Reserve began raising interest rates, cracking the foundation of regional banks. They knew the crash was coming. They knew that when the banking crisis hit, people would try to move their money. If they can track every $600 transaction, they can map the entire flow of money in the real economy. They can see who is hoarding cash. They can see who is buying precious metals. They can see who is preparing for the collapse. This is intelligence gathering, plain and simple. They are building a dossier on your financial behavior, not to tax you today, but to control you tomorrow. The banking system is currently on life support, kept alive by emergency lending facilities and accounting tricks, but the liquidity is drying up. When the next major bank fails, and it is a question of when, not if, the government will need to know exactly where the money went. They cannot afford to let billions of dollars disappear into the shadow economy. They need that capital to remain trapped within the system to prop up the failing institutions. The $600 rule is the fence they are building around the herd. They are counting the sheep because they are preparing for the slaughter. It is about locking you into a system that is burning down, ensuring that when the doors finally close, your wealth is trapped inside with the fire. Now we arrive at the endgame. If you think the $600 rule is intrusive, you have not seen what is coming next. This entire surveillance infrastructure, the 1099-Ks, the data sharing, the tracking of side hustles, is merely the beta test. It is the proof of concept for the ultimate tool of financial control, the Central Bank Digital Currency, or CBDC. The government has realized that as long as physical cash exists, and as long as private bank ledgers exist, they cannot have total control. They need a system where every single unit of currency is programmable, trackable, and ultimately revocable. The jump from tracking a $600 Venmo transaction to implementing a CBDC is not a leap. It is a small step. They have already built the architecture. The $600 rule has trained the algorithms. It has taught the AI systems how to categorize your spending, how to flag suspicious activity, and how to identify patterns of non-compliance. They know that you pay your babysitter on Fridays. They know you sell vintage comics on Tuesdays. They have the map of your life. A CBDC simply gives them the ability to edit that map in real time. Imagine a world potentially just months away, where your money is not your property. It is a liability on the Federal Reserve's balance sheet. In this world, the $600 limit isn't just a reporting threshold. It becomes a permission threshold. You try to send $700 to your brother to help with rent. The transaction fails. A notification pops up. Transaction limit exceeded for this category. Please submit proof of intent. This is not science fiction. This is programmable money. They can restrict what you buy, where you buy it, and who you buy it from. They can enforce negative interest rates, effectively taxing your savings by making them expire if not spent. And here is the terrifying connection to the banking collapse. When the banks fail, the government will offer the CBDC as the safe alternative. They will say, the private banks were reckless, but the Fed is safe. Open a FedNow account, and we will guarantee your deposits. But in exchange for that safety, you surrender your privacy forever. You step into a digital prison where every purchase is a vote of compliance. Did you buy too much fuel this month? Transaction denied. Did you donate to the wrong political cause? Assets frozen. The $600 rule is the barbed wire being strung around the perimeter of this new digital camp. They are conditioning you to accept that financial privacy is a crime. They are normalizing the idea that the government has a right to be the third party in every interaction you have. This is why they are cracking down on the gig economy now. They need to force everyone onto the digital ledger before they flip the switch. They cannot have a thriving gray market when the CBDC launches. They need dependency. They need you to be afraid of the audit so that you will voluntarily walk into the digital pen. It is a psychological operation designed to break your will to resist. They are tightening the noose, inch by inch, hoping you won't notice until your feet are no longer touching the ground. There is only one way out. There is only one exit door left that the government cannot brick up, cannot track, and cannot turn off. It is not Bitcoin. It is not offshore banking. It is physical silver. Not paper silver, not an ETF, but real physical metal that you hold in your hand. The $600 rule relies on a digital trail. It requires a third party, a bank, an app, a payment processor, to witness the transaction and report it to the IRS. But when you hand someone a silver coin, there is no third party. There is no server. There is no data packet sent to a Treasury database. The transaction is peer-to-peer, immediate and completely invisible to the surveillance state. Silver is the ultimate financial firewall. It is the only asset that is simultaneously money, a commodity, and a private ledger. The IRS cannot freeze a silver eagle buried in your backyard. A banking collapse cannot wipe out the value of a silver bar sitting in your safe. When the lights go out on the digital economy, silver will still be there, shining in the dark. This is why they hate it. This is why they have suppressed its price for decades. Because silver represents freedom. It represents the ability to transact without permission. It is the antidote to the CBDC. The government is betting that you are lazy. They are betting that you will choose convenience over freedom. They are betting that you will accept the 1099-K, pay the tax, and eventually accept the digital dollar because holding physical assets feels old-fashioned. Prove them wrong. Every ounce of silver you buy is a vote against their system. Every dollar you convert into metal is a dollar that vanishes from their radar. You are not just investing, you are opting out. You are taking your labor, your energy, and your wealth, and you're moving it into a sanctuary that has survived every empire, every dictator, and every failed currency in human history. Do not wait until the audit notice arrives. Do not wait until your bank limits your withdrawals. Do not wait until the CBDC is mandatory. The window is closing. The $600 rule was the warning shot. The banking crisis is the invasion. And silver is your shield. Get your wealth out of their digital prison while the gate is still open. Because one day soon, you will wake up, and that gate will be locked forever. This is not financial advice. This is a survival strategy. The system is coming for everything you have. Make sure that when they arrive, they find nothing but an empty account and a person they can no longer control. This is boring currency archive. Stay hidden, stay prepared, and keep stacking.